as I'm sharing this, these are steps that you can take currently right now.
Yeah.
I have this dedicated account. Now I'm going to allocate a certain amount of money. I'm going to put that money towards maybe the top crypto assets, right? Maybe Bitcoin to start with, Ethereum, Solana. Start with those. Once you got your feet wet, then you can say, okay, I want to learn more about these different assets. That's where you then say, okay, how do I build a clear strategy to evaluate these other assets? To me, if I was getting started, that's what I would do.
Hey dear listener, if you're like me, you're trying to figure out what are the right steps, the investment moves to make when it comes to the new asset class, cryptocurrency. In this episode, I'm speaking to Ibrahim. Ibrahim holds a master's degree from Nicosia University, where he studied blockchain and cryptocurrency. In fact, for a long time, I've been looking for the right people to speak to about crypto. As you know, there's so much disinformation in the industry. But today, we are going to get the right answers. In this episode, what we're not going to do is try to sell you a product or a coin or an asset. We aim to educate you about the opportunities, the risk, and some of the things to look out for when you set out to invest into crypto. So I hope you enjoy this episode. Take your time, consume the information, take some notes, and be sure to use the comment section to ask questions. And I'll be sure to respond and keep the conversation going. Thank you so much for tuning in to GWP. All you do helps to grow this podcast. So continue to do that, which means continue to subscribe, share, and talk about GWP Podcast. Thank you. Peace.
All right. Welcome to another episode of GWP. It's more like welcome back, though, Ibrahim.
Yeah, part two.
Part two. How you doing?
We're going to turn this into a Fast and the Furious series.
Yeah, literally. I mean, so the first time we talked about crypto and broad world of crypto in general, literally touched on every topic you can think about, I think. We talked about meme coins. We talked about shit coins. We talked about all the coins in the world. But since our first episode, so much has happened in the world of crypto. So I'm super excited to double click on a lot of these things. And I'm sure people that are listening, if you haven't listened to the initial episode, definitely go back and listen. But let's say someone is listening for the first time. Tell them a little bit about yourself.
Yes, so I'm Ibrahim, also known as Investor Abe.
Investor Abe.
Yep. And so I've been part of this space now for over 6-7 years now. So acquired a master's in blockchain, digital currency, built pretty much an investment strategy called the incentive economy, have helped investors, worked with businesses. So that's my journey. Well, to dive in deeper, we can say that my journey started with me having a villain in my story, showing up to work one day, my employer cutting my pay by 50%, realized I didn't control my own financial destiny. From there, took the journey through the rabbit hole of understanding foreign exchange, the stock market, eventually stumbled upon crypto, saw crypto as a great financial migration of the 21st century, and it still is.
Yeah.
And I want to make sure that as many folks can get involved in this space. However, as I was before, which was the guy holding up the sign and say, you need to get in, completely different now, because the space is slightly different in the sense of it is up to you as an individual to get involved.
Yeah. What are some of the changes that you've seen, though? You've been involved in this industry for 7 years. And one thing that I was so excited to talk to you about, and I mentioned this in the first episode, was how much knowledge you've gained in the space, right? You went to school and kind of went as deep to learn way more than, the average person would learn, way more than I know. Obviously, that's why we're having this conversation. Yeah. And hopefully that's why someone is listening to get that knowledge from you. But, you've been in the space for over 7 years now. What are some of the changes that you've seen up to this point?
First is understanding that there is more to the space than just Bitcoin. Bitcoin was the first and is not the last. Now, I know there might be some Bitcoin maxis listen to this. It's not to change. What has changed since, the beginning of this decentralized space?
Yeah.
I would say first thing that comes to mind is there are more real world projects, what we call DPINs, decentralized physical infrastructure projects that are providing real world value. We have seen the growth of the entire ecosystem in the sense of politically laws being drafted. We have now a more, how would you say, a president who is more crypto friendly. We're now pretty much passing laws in different states and things like that. So that's a huge growth in the sense of the ecosystem. But what haven't really changed much is there's still a lack of overall general knowledge and education about the ecosystem in the sense of investing, understanding how to invest as a specific investor. And of course, how do we start getting some of these Fortune 500 companies involved, right? Because your wealth management, if you're the big ones, that makes sense. But the smaller ones aren't getting involved until there's a law being passed and say, hey, you know what? Now you can recommend this to your clients, right? So, so it's a long way of saying that there is a momentum push. Until there is solid laws, and I'm speaking for me being in the U.S., that's when we're going to start seeing trillions of dollars, right? Even though Bitcoin and crypto ecosystems what 2.5 trillion, there's still more room for growth.
Well, thank you for sharing that. I think there's a lot we can unpack there, but one of the things that I kind of want to dive right in about is, you talk about better regulations that there are now. So I was reading an article yesterday, and Australia is kind of like clamping down on, these companies that are basically putting these meme coins out, and people are losing a ton of money. That's one incident. President Trump was recently sworn in, and I have some data points here on this. Okay, so January 17, right? Okay. President Trump releases the Trump Coin. It started trading at $8.59. January 17, mind you, President Trump was sworn in a couple of days later. So that coin went from $8.59 to a max of $74 by January 19, 17, 18, 19. In a matter of 3 days, this coin just jumped up. And guess where the coin is right now? $16.31. That's one example of, coins coming out. And so let's say, someone got in when it was $7 or so, and were smart enough and got out at a decent time. They made money. They probably became millionaires, right? Hopefully they got a lot of it. But someone who doesn't have the experience may have got in and might have gotten hurt. Although there's all this regulation coming through, which is great because it could avoid some of these incidents where, people get the rug pulled away from under them. How do you kind of like navigate this world right now? Because, most people are just getting started on their financial journey. And hey, if I can get started on my financial journey with 5,000 and turn that 5,000 to 50,000 real quick in a couple, 3 or 4 days, that's amazing. But most people are not going to have that opportunity, right? And so the 5,000 that they get, again, I've said this on the podcast many times, but the average American cannot come up with $400 in the case of an emergency. So if someone is brilliant enough, saves a lot, and is able to come up with $10,000 and say, hey, I'm going to start investing. Oh, there's a Trump coin, there's a millennial coin. I'm going to buy it, and then this thing happens. How do they navigate that?
Well, it goes back to what I mentioned in the first episode, if we want to call it that, is you have to start with education first, right? before you dive into any aspects, I mean, I took my time to educate myself.
Yeah.
And once you acquire the education, then you move into how do I apply this to my life? So my recommendation to anyone is you shouldn't be investing until you have actually met your bare minimum needs in life, right? And so if you look at the Maslow, your safety, right? You have food. You're not worried about keeping the lights on, right? Once you have those things taken care of, then you can say, hey, you know what? I want to focus on investing.
Yeah.
Right. And to me, I don't see that as a lack mindset. I see that as someone who is being thoughtful of where they're at. What I've generally seen in our space where folks who are not involved in crypto might consider this gambling is when someone says, you know what, I'm going to take my 401k, my entire 401k, invest it. I'm not going to tell my partner or my wife or my husband and put our life savings into some asset that my friend or someone online told me. To me, that is not a smart investor.
Yeah.
Right. So that is someone who's willing to take risk without actually understand how to mitigate those risks.
Yeah.
So
I think one of the things you talked about in the initial episode that we did, you said, and I'm quoting you word for word, you said knowledge before investing, and you said that multiple times on the episode. So a lot of people hopefully are going to take that and run with, but there's a variable there though, because although you have the knowledge, now you have these authority figures, right? So in Argentina right now, the president of Argentina they're considering impeaching this guy because there's a coin that came out called the Libra coin, and he touted the coin. He pumped it up. And now people have lost so much money, and now people are upset, right? And they're literally coming after him. They're trying to prosecute him. They're trying to get rid of him from the presidency. You have these authoritative figures, right? That because, and we're talking about meme coins right now. A lot of what drives MemeCoin is, the social buzz and all of this stuff. And it becomes really tricky when you have these like authoritative figures kind of like pushing these coins. So although you have the knowledge, you have this person who is the president of a whole country and is telling you, hey, this might be a good coin to buy. And then you buy the coin and you lose all your money. How do you think about that?
So the question is, whose fault is that?
I think this is a fair one to figure out whose fault is that, yes.
Well, we live in the U.S. and of course there's different laws in different countries. I'm a firm believer of a universal law, which is I cannot impact any other person's experience except mine. So if I choose to invest in something, that is my decision, no one else's.
Yeah.
So what we have generally seen from investors in general, it doesn't even matter if it's about crypto, and this is the one aspects that we need to clarify. This happened in the stock market crash and everything. If push comes to shove, I do believe that there is certain aspects of us human beings who are not taking accountability for our decisions. And that lack of accountability pretty much shifts into mom and dad needs to protect me, which is the government. And this is where we have laws that are crafted where the government says, hey, this is best for you because we don't believe you can take care of yourself.
Yeah.
Right? We don't believe you're a savvy investor. So now the threshold for you to become that savvy investor is 100K or 1.5 million in asset, whatever it may be.
Yeah.
That is the government reacting to you not taking accountability, and their job is to say, hey, you know what, how do we protect now, our voters? How do we protect, well, if you look at party wise, right? Or how do we protect our citizens, right, of our country? So to me, there's two sides to that, right? Should we blame the Argentinian governor or the president?
Yeah.
Maybe. Should we blame the individuals who made the decision themselves? Maybe. But at the end of the day,
it's your
someone
money.
made a decision.
Yeah.
Right?
Yeah. No, I definitely agree. And, the reason why this is important to talk about, again, is if you're starting to build wealth, right, I think the first few decisions you make is critical. Like right now, I'm in a situation where I try to invest back home, right? And my due diligence wasn't as thorough as it should have been. And so here I am losing more than $40,000, right?
Yeah.
For someone who's trying to build wealth, you can't afford to have losses like that, right? Because it takes time to stack up and save and be able to invest. And, compound interest is going to work in your favor, but it takes time. It's time that makes the money, right? And so most people are not going to be able to afford some of these costly mistakes, right? And if you're listening to some of these like financial influencers and so on, you need to be very careful, right? To make sure you're making the right decisions. Yeah. Your due diligence is as thorough as it could be. Ask the what if questions, right? And think twice before you kind of dive in, because in today's world, people have their own ulterior motives, right? And if you fall prey to that, that's on you. If you go listen to the president of Argentina and invest in a MemeCoin and you lose all your money, hey, maybe he's probably going to get prosecuted, but chances are you're probably not even going to get your money back, right? So it's good that we're talking about these things.
I mean, this was the ethos of our space, right? A decentralized, permissionless ecosystem where you have the ability to control your own value and you can transfer that value. That has not changed. In any ecosystem, again, stock market, foreign exchange, whatever ecosystem, you're going to have bad actors. You're going to have folks who are not actually playing the game. They are the game, right? They're the ones being played. Yeah. Because they're the ones who are taking the risk without actually evaluating their risk and mitigating their risk. This is something that happens in every market. The reality here with folks like I is that we understand why we're doing what we're doing, right? It doesn't matter if it's stock. It doesn't matter what we're doing in general in life, right? So this is why I say it goes back to you as an individual. What is your purpose in your life? What vision do you have? And what action are you going to take to achieve it? And a lot of the times is who's going to help you with that. So if you're making a decision without going through this process of, what do I truly care about? Yeah. Right. Another example, if I have $1,000 left and I'm a parent and I have a little kid and some meme coin like Trump pops out and someone is telling you how you can make a lot of money, but that's $1,000 you have left in your bank account, right? Should you invest all of it in this meme coin? Maybe, maybe not. Should you mitigate your risk and say, you know what, I'll put, depending on what's needed, maybe I only put 20%. Maybe I only put 10%. Do you have a dedicated investment account for you to allocate funds towards your investment, right? Do you understand how to manage your own wallet, right? This is all relating to crypto, right? Now you understand these things. You know how to read the market and different assets and evaluate fundamentally. If these are things you haven't actually taken the time to evaluate, then you are gambling. Yeah. Right. Of course, there's levels to this. I'm not saying you have to be a coder and, all that different stuff. That's cool. If you have that knowledge, you can still be in a position to succeed by just doing your due diligence and taking your time. This is why I say the education first. Yeah. Right. And who you acquire the education from also matters.
Yeah. I love that you ended on that note. Who you acquired the education from matters. I know you have a really informative blog where you write a lot of great articles, informative articles where you talk about crypto and, how to protect your money and the proper wallets and so on. Mention your blog, and also besides that, where else can people learn more about crypto? I mean, you went to school and got a whole master's on this thing, right? Most people are not going to have the opportunity to be able to go to Cyprus and get a master's in crypto. Where are the best resources people can be using to make sure they're doing the proper due diligence before they get into crypto? And if they're already in crypto, what are the proper resources they can use to potentially maximize their profits and also even mitigate their risk?
Yeah, I mean, there's so many tools out there. There's no one size fits all. What I can only share is what I would do.
Yeah.
Right. So if I was someone who was starting today and my name was Ibrahim, what I would do is I would take maybe an Udemy course on the basics of crypto, blockchain. What is it? What is this about? Right. Once I've done that, as I'm learning, I'm also doing. I'm setting up a wallet. I'm understanding how to manage my private keys, blah, 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 blah. Now I've acquired that knowledge, then it's like, okay, hopefully that course teaches you the fundamentals too of buying an asset, transferring it, how to evaluate that asset, or of course through a mentor, right?
Yeah.
Once you've done that, then you can say, okay, I know I've acquired this knowledge. I've set up a dedicated crypto investment account, right? And as I'm sharing this, these are steps that you can take currently right now.
Yeah.
I have a dedicated account for investing just in case, you never know when the IRS might call. I have this dedicated account. Now I'm going to allocate a certain amount of money. I'm going to put that money towards maybe the top crypto assets, right? Maybe Bitcoin to start with, Ethereum, Solana, start with those, right? Once you got on your feet wet, and then you can say, okay, I want to learn more about these different assets. That's where you then say, okay, how do I build a clear strategy to evaluate these other assets? So to me, if I was getting started, that's what I would do.
Yeah.
Right. So,
I love that. Your points are kind of like giving me those segue questions. You mentioned how do you evaluate the asset, right? Before we press play to record, I was asking you, if I'm getting into stocks or if I'm in stocks, not just stocks, even think about real estate, for example, right? There are tried and true ways to evaluate a real estate asset, for example, right? Stocks, same thing, right? If I'm trying to invest into a company, I may look at their revenue, I may look at the PE ratio, I may look at the peers, the market cap, whatever. There's all these metrics, analytics out there that allows you to evaluate a company before you invest into it. If someone is following what you've mentioned so far and they're at that point where, they've saved that money, they have a little bit left, now they're trying to get into, crypto investing. Now they want to figure out, how do I even evaluate Cardano? How do I evaluate, I'm not going to say Bitcoin because this thing is almost at 100,000 right now, but maybe they want to evaluate Bitcoin or whatever it is, whatever the coin is that they want to evaluate. How do you go about that?
Yeah. So I have my own strategy.
Yeah, we want to hear that.
You want to hear that first? You want to hear that later?
Yeah, we want to hear your strategy. However you want to, package this for us. So, let's do it.
I'm going to give you a general term, and then I'm going to give you my strategy.
Yeah.
So on the general aspects, you need to read the white paper. If you have the time to read that white paper, read the white paper. It's pretty much where I say is the thesis of what the project is doing. And the goal is to take something out of it that you can say, okay, this seems like something that could be applied in the real world. And what I mean by that, it can create mass adoption.
Yeah. So the white paper is more like the manual.
Yeah, it's more of an overview of what this project is and what they're trying to do.
Got it.
So once you read the white paper, or you can get like what we call a shorter version of that, right? A light paper. You can read the light paper, understand how much token is going to be, being issued.
Yeah.
So a platform that's like Bitcoin only issuing 21 million, right? With a fixed supply. So if you understand how economics work, you can say, okay, fixed supply, a light paper, you can read this. It's a possibility that the price will skyrocket, right? And then you look at staking. There's so many different things. This is why before you can even dive into this, you have to understand the basics, right? Because none of this will even make sense if you don't understand the basics, right? My strategy for crypto investing is what I call the incentive economy. So during my time at Nicosia, I wrote this research paper, And the concept is, in crypto, we have what we call the trilemma: decentralization, scalability, and security. Okay, yeah. So these are the three trilemmas, in a sense. If you want to build a perfect project, these are the three things you're looking for. What I notice is, in these trilemmas, in the middle of that is what I call incentive. No one does anything for free. No one builds anything for free. There has to be incentivized. So even the incentive mechanism, so it's like the trilemma. Once you dive into that, there's also other aspects of it that you have to evaluate. And so it's a core dev team incentivized? Is the stakeholders, the folks who are willing to build on these platforms, incentivized? Are the enterprises, folks who are willing to partner with this project, incentivized? Once you understand these different things, because the trilemma itself is just the basic. You have to understand. That's why I say the basics is very important.
Yeah.
You have to read the white paper. You have to understand, okay, is this a secured project? Is this something that's going to crash in 2 days, right? A turn off, right?
So
is this something that is decentralized or scaling to decentralization? Those two separate things, right? So you're looking at all these different things, right? The security, decentralization, scalability, to then say, okay, now I understand these things. What does it technically do to incentivize folks to participate? And is this something that is going to create mass adoption, right? So Bitcoin is a disruptive innovation. Can this create close to that, or maybe something that we may create like real world adoption, right? So a great example of this, I know a lot of people talk about Deepins, right? Deepins is a cool kid on the block. And so with Deepins, there's so many different projects that have this incentive mechanism involved. But the question is, how do you actually evaluate which one is the right one? So this is what the incentive economy does. It helps you evaluate assets based on, does it have the right incentive mechanism to scale over time?
Okay. That's I feel like there's a lot to unpack there.
It is, yeah.
And to your point, knowledge before investing, right?
Yeah.
So if you're listening to the podcast, I'm sure you still have a lot of questions. You're probably asking some of the things that I'm thinking, right? So I kind of want to talk about that trilemma a little bit more, right? So let's probably pick it apart a little bit. So decentralization, I think in the first episode we talked about that a little bit. I think that's kind of what gives crypto that zest, right? That's kind of that the fact that there's no central bank regulating minting this money. That's kind of what makes this exciting. Is that
it's maintained by a system? And that system is a peer-to-peer system, depending on how it was built. Proof of work, proof of stake, whatever system that is being built is. The power is given back to the general community to run a node, right? To operate the system itself.
Got it. So when I'm looking at decentralization, let's say we're looking at this as three different arms right now. So when I pick decentralization, what am I looking at? Am I looking at the nodes that's being kind of...
The amount of nodes.
The amount of nodes.
Great.
So what's a good amount of nodes for me to say, okay,
it
next
really
step.
does depend. The more the better, right? It's like it's like saying, does 10,000 nodes keep your project decentralized? I don't know. Does 100,000 make your project more decentralized? I don't know.
So in that case, do you kind of compare it to peers and say, okay, maybe Bitcoin has, I don't know, 30,000 nodes, so this one should have 25,000? That makes it good?
It really just depends, because again, it's how is decision made, right? So a great example of this is early Bitcoin, right? And some folks may have some history and understanding. If I would break this down for Bitcoin itself, is Bitcoin decentralized? So far, yes, right? That's what we know. Bitcoin hasn't been hacked and blah, 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 and it's gone through its phases, right? Is Bitcoin secure? Yes, so far. Nothing. Bitcoin's still Bitcoin, right? Is Bitcoin scalable? That's a conversation that's being had, right? Because we've seen Bitcoin Cash, we've seen all these different projects that have forked out of Bitcoin. And the biggest question was, is it possible for Bitcoin to confirm more transaction, and now we have Lightning nodes and all that different stuff, right? But that was a big issue. The reason why that's a big issue, because it was an issue of consensus. How do a group of people who are part of a community form an agreement, right? And what I've noticed is, if that isn't written in code, if that isn't literally systemized, then you're going to have issues with folks saying, hey, you know what, Bitcoin should have this amount of block size space, right?
Okay.
And what if some folks disagree? How do they solve that issue? And this is a great example of what Cardano has been doing, right? Cardano has created a constitution, right, to govern its entire system. So it doesn't rely on one individual to decide the fate of Cardano. So this is a great example of that. But what I'm saying is, this is the reason why everything came from Bitcoin and expanded, right? It's human nature. We look for ways to solve problems, right? And I like to call it the island effect. I'm happy to share that later on. But it's a great example of the island effect, right? So
what's the island effect?
It's quite simple. If we can imagine two island beds, so it's like, where you have a beach, right? So you think two beaches on both sides that's divided by a mountain, right? So you have one side of that island as Bitcoin island, right? And then you have another side of that island that could be anything. Let's just say Ethereum in the beginning, right? But Ethereum wasn't there. Ethereum, didn't even exist. So let's just say there's a few group of folks who hear parties on the opposite island. Maybe that's what we will call the pre-seed or understanding of, Ethereum, or folks thinking of building something that might be more valuable to greater community, right? Let's just say some folks are tinkering with, this whole aspects of our ecosystem. Some of the folks at Bitcoin goes over, they're like, oh, this is great. I love what they're doing. They come back to the Bitcoin island. They say, hey, we should implement a lot of these really cool stuff. And then some folks there are like, no, we're not going to do that, because that's not what our God, Satoshi, told us to do, right? So if there isn't a process to vote on those consensus or do those things, then these folks are going to say, you know what, I'm going to go back to that island and build over there. So if you really think about this, this is pretty much the story of Vitalik, right? Building Ethereum. And so this concept is, hey, you know what, why don't we have a programmable system where you can build on top of these computers, these nodes, right? And they were like, no. So he said, okay. He went and built smart contracts. He built Ethereum to be pretty much the layer where you have smart contracts and you can build on top of what I would call applications, right? Which is cool. It's the same thing like your smartphone, comparing it to a payphone. Payphone you can just make calls with. With your smartphone, your iPhone, you have application. That's what makes your iPhone different and cool. You have all these different applications. So smart contracts were those applications that people can build their own project on top of Ethereum.
Interesting.
So when you start to see how ecosystem grow and adapt, you learn from the failures or the lack of improvement or the lack of community voice being heard, and you see projects like Solana, Cardano's being built, right, to solve problems that other projects haven't solved. So that's what an ecosystem does. It's not a wrong or right answer. This concept that there's going to be only one to rule it all, I don't believe that. What will happen in the near future, which I do perceive will happen, is there's going to be some assets that are considered the bread and butters, right? The ones that have met what we call, once this is passed, decentralized, right? Here's a criteria of being decentralized. Here's the criteria of you being considered a tier 1 crypto asset, right? That will happen. The question is, who's making that decision, right? So hopefully those laws are being passed in the right way, where you, as a crypto investor, can evaluate in a thoughtful way, instead of it being someone who knows someone and then wants to just put their asset as a tier 1.
Yeah. The interesting thing about this topic is we could talk about this for days, and we're probably not going to do it justice. But still on the topic of evaluating the crypto. So we're still on the trilemma, right? So you've touched on decentralization. I think you did a really great job helping us understand that. I feel pretty good about that. The next one is scalability. I feel like that's probably straightforward, right? How many people are going to use it? How big is it going to get? What's the network effect of it?
Yeah, I mean that's what, for me, I look at scalability as consensus.
Okay.
Like what happens when someone or a group of folks doesn't agree with the system or the way the system is being built? Is there a way for you, a smart contract, or a way for folks within the community to vote on the future of that asset?
Is that what Cardano does with that constitution you mentioned?
Yeah. So, before Cardano, I mean, Catalyst is still there, right? Where you can put in an idea, strategic idea of something that could be valuable to Cardano community, and the community votes on it, right? And if it passes, it's implemented, right? So there are projects that are doing that now compared to before, where we didn't have that in place. But to me, scalability is there a clear consensus in place for growth of that ecosystem? If it's, hey, how do we want to spend, 2 million of our tokens. Let's just say the foundational team wants to spend 2 million of the token. Is there a way for the community to approve that?
Yeah.
Or is it just a team saying, hey, you know what? We're just going to make a decision and hopefully this works out, right? Is that decentralized? Is that scalable? Never know, right?
Yeah.
So all of these things play a role. But at the end of the day, it's about consensus. Scalability, to me, is about consensus.
Got it. And then finally, security. I think you talked about that pretty extensively on the previous episode we did, where we talked about the offline wallets and stuff like that. But talk about how would you evaluate, a crypto asset?
Security.
From a security standpoint.
This is a tricky one, but it's also a unique one. Of course, what we know, the more nodes you have, the more decentralized you are. The more nodes you have, the more possibility that you may be able to deal with certain attacks that may affect one node compared to the other node, just for layman terms. However, it's also, how was this project built in a sense of code? Has this project been evaluated, right? Has the code been evaluated by third-party platforms, right? And those things play a role, right? How many evaluation has it had? So you could say that's a good thing. If I see a project being evaluated on GitHub, there's a lot of involvement, right? There are white hackers who are saying, hey, we see some here, let's fix that, and the actual projects fix it. So this is where you have to get your community involved, right? So you want a community of developers, you want a community of builders and entrepreneurs and all those different things who can say, hey, here's what we want to see for the future of this asset. And what you're also going to see is greed, right? You may have projects where the founder of the foundation decides to do a 360 and say, hey, I don't believe in this is what we perceived this project to be. How do you deal with that? That's a great example of, Ethereum, where some of the founders, moved on and create their Polkadot, created, Cardano. It's how is that system prepared for that potential situation? Right, where it's not, okay, because I have this amount of ownership of the asset, I can now take control of the entire, project. So this is where I mean by consensus, right? Like, how is this project built? What are some of the parameters that are in place where folks can say, okay, because there are these amount of nodes, because we have evaluated the actual project in the sense of third-party platforms, now we're ready to say, yes, this is secure for this period of time. Right? Because you just never know. 10 years from now, is it still secure? Maybe, maybe not.
Yeah.
It's how is this project scaling? So there are certain projects I would say I'm willing to bet my house that I don't have to worry about, right? That's how I'm sure about these projects because of how it was built.
So still on the topic of security, right, and how secure these things are. You've heard about quantum computing, right? The rate at which quantum computers are being developed, and I don't know about the adoption rate right now, but obviously it's developing very fast. Like before the end of 2024, Google released a quantum computer called Willow, which performed really, really well. So got a lot of very good feedback, and obviously like quantum stocks started to trickle up because of that. There's conversation though that quantum computers might be able to crack the Bitcoin code or whatever the security is. Do you foresee that happening?
Yeah, I'm not really worried about that. I'm sure a lot of folks in the crypto ecosystem who understand the way our ecosystem work aren't worried about that.
Why?
The reason why is we have this special ability to fork a code, right? So you can always fork a project. If someone decides to hack the project and it's not what we intended it to be, the community, if through consensus, can vote on saying, okay, this has been a major hack. Do we want to fork this into maybe a soft fork to address this issue and maybe be more prepared when it comes down to this attack, right? So, however, in the meantime, there are projects that are already preparing for that inevitable of quantum computing. And of course, folks who are way smarter than me in that aspect. So, yeah, the crypto ecosystem is not too worried about that. Maybe a smaller project that doesn't have the amount of reach in the sense of its resources, right? So if you're a small project, maybe 5 million in market cap, you might be worried about, quantum computing, right? If you're a project that's Cardano, Bitcoin, and larger projects, you're probably not too concerned. You say, hey, you know what? We got the nodes. We feel that we can adapt. We're building. We have researchers who are, looking into some of these potential attacks, right? Right. We have a community who will support, and this is the biggest part, right? This is why you need a community. It's why you need consensus who would support us if there was something like this, right? They're not just going to just say, okay, this project is dead, because they understand why. They're willing to band together to solve that problem. So that's what makes this ecosystem very unique, right?
Yeah. So what I'm hearing you say is if someone is considering investing in crypto, for example, Bitcoin, and they're also worried about what quantum computers could do to crypto, they can sleep and leave the doors open.
I wouldn't worry too much about that right now.
Yeah. This
is not, maybe in the next 10, 15 years, could that be something to be worried about? Yeah, maybe your MemeCoins, maybe where your project is being built. Yeah, that could be something that could be of concern. For right now, I'd say some of the top notable projects are looking into those things, and they're not worried about it. I'm not worried. Yeah.
Got it. Love that. Okay, that makes me feel good in terms of security. Okay, let's move along. So,
well, you should worry about quantum computing maybe with banks. I see a lot of people look into
yes.
Okay, it's so interesting that we focus and say, okay, let's try to break crypto, make sure it doesn't work. But the question is, you can do the same. You can use the same quantum computing and crack.
Bank code. That's actually a big concern. It's a big concern right now because it's something. Value. Yes, and it's actually one of the things that quantum computers could do right now. Like they can't crack Bitcoin yet. So you're saying 15 to 20 years potentially? Yes, that's something that's being talked about. But right now, could they potentially, figure out your bank and get into they're more closer to that than they are closer to cracking Bitcoin. So yes, I love that you bring up that point.
So this is why there is a race for nations in developing blockchain and utilizing blockchain technology, right? There is a race, and I would say previously,
who's winning that race right now?
It's hard to tell, right? Because you have smaller nations that are more robust, they can move faster. Then you have bigger nations that are still figuring it out. You know, U.S. is still figuring it out. We could say with this momentum of the new leadership, maybe we can solve some of this problem and implement things quicker. And the one thing about the U.S. is when it comes down to investment, where you want to put your money and blah, 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 you probably take a bet on U.S. market, right? So,
100%.
So who's winning the race? I can't really put my hand on it. The development is happening as we speak. Someone can be at top today, tomorrow can be someone else. So it's not a one size fit all. Now, when we talk about blockchain technology and with banks have been utilizing blockchain technology, right? In its own, they've been testing, researching blockchain technology, and Chase banks, some of the big banks are already utilizing the technology in their own unique way, but in a private way, right? They're not public blockchain systems. Maybe hybrid, utilizing other open source technologies. They're aware of quantum as well, so they're also trying to give themselves a fighting chance against a potential technology like this affecting their entire ecosystem. So this is something that folks need to also understand. Our technology, or if you want to say blockchain ecosystem, is not just crypto, it's widespread. How you choose to use that technology, depending on the sector that you're in, it depends on you. Right? It depends on that specific sector. It depends if it's in banking, if it's real estate, or whatever it may be.
Well, yeah, thanks for sharing that. And yeah, that was definitely something I was thinking about. I was like, man, this is going to be a game changer, because the CEO of NVIDIA was asked, what do you think about quantum computers? And he was like, 15 to 30 years, they're nowhere near.
Yeah, I'm more concerned with the centralized platforms than I am concerned with the decentralized platforms. Think about if Google went down. Think about if Chase went down. Not saying it's going to happen. Think about if NVIDIA went down. So these are platforms that we as human beings rely on so much. I remember there was a story of not too long ago. I don't know if you guys remember. You can do your research on this. It was like airport system that went down. I'm forgetting their name. It was recent.
Oh yeah, it was Microsoft. Microsoft and CrowdStrike. Yes.
Went down.
Yeah.
Centralized system.
Yes.
And now half of the nation could not operate a very valuable resource, which is air transportation.
Yeah.
Right?
Yeah.
So
that was a huge deal. Yeah.
So I would be more concerned with the centralized ecosystem than I would with the decentralized.
Yeah. What about AI? Right. So right now, I mean, everywhere there's AI, everything. Right. So how is that kind of, because I think when blockchain and crypto kind of became more mainstream, AI wasn't fully in the picture yet. Probably like in the background somewhere, but now it's front and center. How is that changing the landscape of the crypto and blockchain industry?
AI, especially within crypto, was already being used. It wasn't a race to develop more AI products that people would utilize, right? So this is the one thing is now there is that race where there's a competition between decentralized AI, open source AI, so DeepSeek versus ChatGPT. So you have those kind of race. If we're speaking specifically for crypto, I do believe our space is always going to have an advantage. Why? Community, right? You have a way to band people together. And I would say a lot of folks do not understand the significance of this. You now have professors who, instead of them going for those, writing some research paper and being tenured professors and stuff like that, they can partner with some crypto projects and receive the funding to solve a specific problem, right? If it's a research, if it's something that relates to that specific ecosystem, and receive the funding for it. Not only receive the funding, probably even make a living from it.
Yeah.
So what makes our space unique is that incentive part, where there's so many collaborators, right? So an ecosystem can have collaborators of researchers, professors, and advisors in the financial, ecosystem, right? So many collaborators who are seeing this as value, and they want something back in return, or they want to contribute, right? So that's pretty much what it is. And the token, issuing of the token, creates that ability to offer that. And that's one thing that the centralized space has a hard time doing. So when I think of AI, the building of AI projects are already doing that. AI is scalable through open source technology, right? Because the more input you get, the more folks can decide the future. Grass AI is a great example of that, right? There's so many different projects that have been doing this in crypto, where people are saying, yes, I'm willing to provide value. If it's, hey, use, I'm going to put this node on my computer or my phone, and yes, get whatever you need as long as I'm receiving something back in return, right? Of course, you want that system to be safe. This is where the node operation comes in. The security, the scalability comes in, right? Is it decentralized? Is the scaling decentralized? So it's a fun way of saying that. From my perspective, I remember someone telling me that the AI community doesn't need crypto. Crypto needs AI. And I'm like, you are completely unaware of what crypto is. And the fundamental of just our space is crypto, if you want to say blockchain, whatever you want to call it, is the infrastructure of anything else you want to build on top of. That infrastructure creates the ability to create consensus, have communities that can help you scale a system. That is what makes our space so unique, right?
Yeah.
The centralized space cannot, yes, they may be able to get funding and, all these billions of dollars being thrown at it. However, if you have an ecosystem where 2 million people are running nodes, that's very valuable, right? You have people who have an intrinsic or extrinsic need to see this succeed, or want to see it succeed, right? So yeah,
that's really, really interesting. A lot of coins have been popping up out of nowhere. I think in our previous episode we talked about the Hawk Tour girl, and then since then there's been so many different ones, right? There's the Libra one with the Argentina president we just talked about. There's a Trump coin, many coins. Can I issue my own coin? Is it that easy?
Yeah, I mean, you can create your own coin. The question is it going to be valuable to other people, right, folks?
How do I make it valuable? Do I have to hit the Trilemma, make it scalable, make it security, and then decentralized?
That would be great. I mean, you can go to Solana and create your own coin.
Okay.
However, when we look at what works, especially in the strategy-wise, my strategy incentive economy, you need nodes. You need people who are willing to provide value. Of course, before that, you need something that's scalable, decentralized, the trilemma aspects, right? The more nodes you have, the better. Why would someone want to run a node? What's the value of them running the node? Of course, they have to get something back in return that's valuable to them, right? So, and if they believe that this system will scale over time, and now there is partnerships, real world partnership with Google, Amazon's, or whatever it may be, then they see and say, hey, there's a potential chance that I may be wealthy or rich from this, or I may create cash flow. And that's the game. The game of investing is about cash flow. Yeah. Right? So, maybe I can be able to build enough, investment over the time where now I'm earning my staking rewards that I can live off from, or whatever it may be, right? So all these different things play a role, right, in the success of that project. And of course, now we talk about promotion. This is one thing a lot of crypto projects, some do great at and some don't do very well, or some may say, hey, we're focusing on making sure this project is built in the right way.
Yeah.
Some may say, hey, you know what, let's promote it as much as possible. We build the plane as it's fall. And that's kind of what you would say is a traditional model. So which one is best? Maybe a combination of two. So can you build your own tokens? Probably, yeah, you can. Anyone can. Is it going to be valuable? Maybe. If you're a celebrity, people might want to buy it. But is there value to that coin?
Yeah, that's interesting. So what about the node piece that you talk about, right? So maybe I get a node on my iPad here, and then I start running the node. What do I get in return? Because what you talk a lot about is that incentive economy. Is that related to that?
Yep. So it depends on the project.
Okay.
You have demo that focuses on getting cars more smarter, so connectivity of car. And so you can plug in a demo device into your car and you can earn demo rewards for you keeping your car connected to the network, right? So that's an easy one, right?
Yeah.
So you have Helium that's been around for a long time now. You have other projects that are doing similar things, right? That, you know, I'm happy to dive into later on or another time, episode 3.
Absolutely, yeah.
But these nodes, one of the things that I look for is simplicity. There are nodes that require you to buy physical devices, right?
Really?
And those devices could be expensive. It could be $300, could be $500, could be $1,000, $10,000, right?
Okay.
So I also look at, okay, would the general individual be able to afford this? And is the value or whatever they're getting back in return worth their time, right? Or is it just a project who's just putting out a physical device and they're just making money from it, right? So all of these plays a role. So you evaluate all these different things and you say, okay, this could be a disruptive innovation, or they may just disrupt the general market, and this value can be mainstream. This could reach any individual who doesn't know anything about crypto. So that also means simplicity, right? What do most people generally interact with? Their phones, their laptop, their cars. So when you're building a project that you want to scale over time, you have to consider those things, right? I mean, majority of people have a phone. Majority of people are on the internet. So the easier you make that process, the better. The harder you make that, the more people are like, okay, I have to understand how to put, set up a wallet and blah, blah, blah. And of course, yes, you should have your own wallet. But the more simplicity, the better, right? The harder it is for you to run a node and get involved, the harder it is for you to create that natural adoption that you want. My say is, a perfect project is a project that even my grandmother could use. My grandma doesn't have to know very much, and I'm just using this as someone who may be not tech savvy. Some grandmas might be tech savvy, right? But that person could say, okay, all right, so I just download this from Apple Store, great. Maybe they might need help from their grandkids or whatever. All right, so I plug this in. All right, I connect this through my Apple ID, great. Okay, I can create my own wallet, great. Okay, and I click this button, and now I'm contributing to this network. Simple, great.
Yeah,
they don't have to do much. Or I plug in this physical device in my car, and that's it. Okay, great.
Yeah. How much money could one person make from kind of like running a node on their device? Like, is there a range? I'm trying to see if this is, something viable. People who listen to this podcast want to find passive income, right? And this, this incentive economy that you talk about has so many opportunities for passive income. And what I say is passive income is not always passive, right? People tell you it's passive. What they don't tell you is maybe the first half of the investment, they had to do so much work, and then over time it becomes passive. But this one sounds a little more promising, right? So I can, download the app, contribute to the node, and I'm getting paid. How much money could someone make from that?
It really just depends, right? It depends on, are you an early adopter? Are you someone who got in, for myself, in 2013 or
okay, let's say you're getting in today. How much money?
In today. It really just depends on the specific project.
Okay.
Right? So the specific project have their tokenization.
Yeah.
They may issue this amount of token. If you were the 200 person who got in, you may get more of that token allocation compared to if you were the 500,000 per, number 2 million, right? So it depends, right?
Yeah.
As the assets scale, what is being issued at that time is based on the tokenomics. So is this something that someone can build a cash flow, because that's the game? Yes, there are people who have built cash flow.
Yeah.
There are people who are running Helium nodes, there are people who are running World Mobile. There are people who are running so much these different platforms that rewards you. Demo, right? Fleet business. These are what we call fleet businesses, right? Where you may have a physical device. Sometimes it might just be connected through your internet, phone, or laptop, and folks decide to refer their friends, or they decide to acquire more, friends and family, eventually scale into, into a business, right? So for example, Demo, a great example of this is, you may start with your friends and family. Say, hey, I got this device, no cost to you. You plug it, we split, the earning rewards. This is what I do right now, right? You split the earning rewards. Let's just say 50-50. Maybe you start with your friends and family. Then you may scale to, Uber drivers or folks who might find this interesting because of where they're at, right?
Yeah.
You have to meet people where they're at. So it really just depends. For example, I have the Helium mobile plan, right? When I got in with the Helium mobile plan, I got in doing beta, $5. That's my mobile service plan right now, right? So when I got in, it was $5, and I told my wife, like, look, this is new, it's different, let's give it a shot. She was like, am I gonna get this? Am I gonna get that? Is there Bluetooth? So I had to kind of pitch to her, like, hey, here's the value of this, right?
Okay.
And you're also at the time earning mobile tokens. Now you're earning HNT, right? So over time, I'm an early adopter. So my plan is fixed at $5 plus taxes, total for my wife and I, $13, right? So that's what we pay on our current mobile plan, right? So if you're someone who's paying $150, you may look at this and say, you're paying $5? Well, now it's scaled more than $5. Now it's like $30, and then there's the free plan, there's the $15 plan. So there's different option there. But what I'm saying is, for me, I'm ripping that benefit because I got in early. Right. So there's multiple aspects here, but that doesn't mean that you cannot find this valuable, now. If you're like, hey, I would rather pay for a $30 plan because I wouldn't use my phone more than that 30 gigabytes, right?
Yeah.
So that makes sense for me, and I'll rather pay that $30 instead of paying $200 or $150. So there are different projects for different needs.
Yeah, no, definitely. No, but I love that, this could be an avenue where people are not just thinking about, because sometimes, investing could be passive, it could be active as well, but people are not just thinking about it just broadly, right, as just investing, but also think about that passive opportunities that people can find.
To give you context in this, because this is what I do. This is the incentive economy strategy, right? You have to provide value to a network. The question is, what we've seen before in the centralized space is there were users, right? You were using a platform. You were using Facebook. You were using, you can say you were a creator, but you're still using the platform. Hopefully you're able to monetize your likeness, right? But in this ecosystem, you are a participant. You're an actor. You're actively participating in the scalability of that project. So now you have skin in the game.
Yeah.
This is why we have maximalism in crypto, right? Because folks are like, I love this project and I want it to succeed. Every other project is, shitcoin or whatever it may be, because they believe in it so much.
Yeah.
But the reality of that is, if you are someone who have any investment knowledge, you understand in any ecosystem, it's going to scale. There's going to be innovation.
Yeah.
So to only bet on one horse compared to betting on all 7 horses that's in the race, if you have that resource, is great.
Yeah.
Now, that doesn't mean you have to invest in every single cryptocurrency and just say, I'm going to cast a wide net.
Yeah.
That's why I go back to the knowledge before investing, right? Is if you know what you're doing, you can say, okay, here are some few horses in these races that, based on my evaluation, I'm willing to put a certain amount here, and see where it goes.
Yeah. That's pretty good. I love that. Another thing I want to ask you about, this one might be a little controversial, but I think I can prefix it before I ask you. Nothing here is investment advice. Make sure you do your research and all that good stuff. But I wanted to ask you, what are like the top, it doesn't have to be 10, but top 10 crypto assets that people should be looking at, or that maybe you're looking at right now?
Yeah. So what I would do is, if I was going to build my portfolio, the first thing I'm going to say to myself is base layer. So this is the infrastructure. Where is this project being built on top of, right? Because you have layer 2s, layer 3s, blah, 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 right? So you start with the base layer.
Okay.
So you may say, okay, I'm going to have Bitcoin. Bitcoin is on its own island, right? And then you have these other projects. Then you're going to say, okay, which projects have a good infrastructure, like the base layer? The ones I would recommend and say, okay, these are ones I would invest in, is Cardano, the Polkadots, right? You may even throw in some Solana in there, just based on how scalable Solana has been. That's where people are building at, right? So now you have these base layers. These are your bread and butter. So you have Bitcoin, Cardano, Polkadot, and Solana, right?
Okay.
Right. So you put a certain percentage in there. Maybe that's, again, this is not investment advice. Maybe 20%, 30%, I don't know, 40%. That's up to you, depending on your risk tolerance, right? So this is your base. Now you want to look for projects that are on top, that are building on top of these projects. Why? Because now you know the base layer is secure, right? When it comes down to the trilemma, you want to know it's scalable, decentralized, secure, right? Now you know that. Then you look for unique projects that are building on top of it. So if you take Polkadot, you have what we call PQ, right? That's building this deep-in ecosystem on top of Polkadot.
Okay.
Right? So you may want to find, or maybe invest in PQ, or invest other assets that's building on top of PQ, right? If it's Solana, then you have HNT, you have other projects that build on top of Solana. So you now get to pick and choose from each of these base layers, because you know they're secure and you know they're not going anywhere, right? Just based on how it's built, and pick specific assets from them that you believe could be layer 2s, and maybe you throw in maybe 10% or 15% of your portfolio. Then you go to the high risk. These are the meme coins. These are the, for me, I don't care for them. This could also be NFTs, right? So you can say, okay, if you're like, you know what, I'm doing good in my portfolio, I want to throw 1% on this, or 2%. You're not going to lose any sleep on that. You can. I'm not going to, no one should, look, if you want to invest in meme coins at 1%, 2%, or 3%, there's nothing wrong with that. That's up to you.
Yeah.
If you want to buy some NFTs because your best friend right next to you, who you knew since college, created an NFT and he told you it's going to be a multi-billion-dollar NFT, sure. If it's Trump Coin, sure. It's up to you.
Yeah.
But just know that that's 2-3% of your portfolio, right? That's up to you. But that's what I would say my portfolio would look like. Now, what you want out of this portfolio as well is what folks may not mention. Remember, the game is cash flow. I may want to find projects through the incentive economy, projects that I can invest in and I can earn like Demo and stuff like HNT, where I'm earning for my daily routines, right? So those are great. So not only are you investing in the base layer protocol, not only are you investing in some of these assets that's built on top of these protocols, layer 2s and layer 3s, you're also cash flowing or earning through staking, through building a fleet business, whatever it may be, right? Earning that cash flow or passive income in that way for being a node operator.
Yeah.
That's where you want to be, right? Because now you're actually providing value. That to me would be a really solid portfolio.
Yeah. Interesting. And how does that portfolio take care of risk? Is it based on kind of the analysis that you've just done, making sure you're getting things that are trusted, they're going to be there for a long time, and then you kind of just build it on top of that? Does that take care of risk, or are there, because like if I'm buying stocks, for example, I could hedge my bets, right? So I can, maybe I buy Tesla, but then I buy Ford also. So if electric cars tank, then combustion vehicles are still going to be around. So then I'm probably hedging my bet that way. Is there a thing such as that in crypto?
There are tools like that, but sometimes these tools are centralized. So you may have to utilize your own portfolio allocation tool. So what I would recommend for folks is the easiest way to go about this when it comes down to understanding your investment, when it comes down to risk management, is what is your time horizon? What is your goal? Like, it still goes back to the basics.
Okay.
Right?
Okay.
How do you plan to take profit? I would if I was investing, I would recommend taking incremental profit as your asset scales up in value. So if it's you started up as investing the asset at 25 cents, it's scaled up to 75 cents. Are you taking incremental profit? It scales up to $1 or $1.50. Are you taking, you have to decide what is that price point for me to take profit. The folks who lose this game, I don't like the word lose, but the folks who aren't fortunate in this game are folks who decide not to take profit. They're the ones who their portfolio hit, and trust me, I've seen this a lot. I've had conversation with folks. Oh, my portfolio was $500K, but I chose not to take profit because I believe it was going to
go up more. Greedy.
Right? The greed kicks in, right?
Yeah.
Instead of saying, okay, all right, this asset is scaling, my portfolio is scaling. All right, I'm going to put 5% in USDC or US dollar, right? Stable coin, whatever stable coin you want to use, USDT or USDC. All right, 5%, 5%, 5%, or 10% here, or whatever it may be as the assets scale. But remember, if you are also utilizing the incentive strategy, you're still earning for that base principle of asset you still have, right? You're just taking the incremental profit. And you're probably earning it back through your staking, right? Or through your node operation. So in a sense, you're just paying yourself back for your investment, for your due diligence, for your time that you've invested. So to me, that is what I recommend. So here's one thing I would say folks need to remember about this. There are peer pressure in crypto. I've seen project founders, state that, we want to be transparent, and this VC company decided to take or liquidate their asset, and we're completely against it. They should have held on to their asset longer. That's their decision. So there's gonna be this peer pressure, like, hold on to your asset, and don't sell. It is your choice. That person's not gonna be there.
Right.
So if you have financial stress in your family, whatever it may be, and you're like, you know what, I may need to liquidate half of this, or I may have to, get a loan against my asset, which would be great. The better form, hold on to your asset and just get a loan, like LTV, loan to value. Great, do that. do not put yourself in a position of where you have to lose everything
Yeah.
just because you want to hold on to your crypto assets.
Yeah.
Right. Make that decision.
Yeah. And that happened not just in crypto, but it happened in stocks. So like, I don't know, I'm sure people know the story of the roaring kitty, the big meme stock, GameStop guy.
Did he take profit or no? He still hasn't.
No, I don't think he's out there like that anymore. I mean, it was a whole thing.
I heard he's at $1 billion now, right? Or close to that number.
Most likely. I mean, he had to testify in Congress, but then he came back, right? He came back because he built a whole community, and there were all these people that they wouldn't sell until Roaring Kitty got back to let them know what they're going to do. And people were literally sitting down and watching this thing go up and down, and their accounts get locked because they couldn't trade out of GameStop and so on. Yeah. They were literally waiting for this guy. So like to your point of, the peer pressure, and it's not even, at that point, it wasn't even just peer pressure, but more or less like a peer god or whatever.
No,
right?
It's called bewildered herd. Right. And it's a natural thing that happens with folks who follow instead of lead their own life. Yeah. Right. There's nothing wrong with following, but leadership comes from within. Yeah. And a bewildered herd is just someone who's willing to follow anything, jump off a bridge, buy a meme coin, whatever it may be, without doing their own knowledge first, right? So to me, there's nothing wrong with Rolling Kitty. I think he built a great community. Yeah. He wanted to help, whatever lens you want to look at it. Yeah. But there's still a lack of education there. Oh, yeah. Right? Yeah. I mean, no shame to him, but it's like, hey, what if he did share? Hey, take profit. Why wouldn't he share that? Yeah. Yeah. Maybe because he's benefiting from folks holding on because it pumps his asset a lot more. I don't know. I don't want to say that's what he's doing. Yeah. However, in the end of the day, does he owe that to the general public? That's another question. Is this a fiduciary duty for him to say, hey, you need to... more of a moral duty because he wasn't anyone's financial advisor or anything like that. But then that goes back to when we talk about a market crash. Should there be a bailout? Should they not? It just, all these different things factor in, and the folks who succeed are folks who are grounded and say, hey, whatever decision I make, whatever outcome that comes out of this decision, it is my own decision. It is not anyone else's expectation. It's my own expectation. I made the decision, and for that, I need to learn from it. Yeah. And there are other folks, if you are married, there are folks who depend on me. If you have kids, there might be folks who you're dependent on. Whatever it may be, you have to make that decision. Yeah. No one else. Yeah. So, yeah. Yeah, it's key. It's key, especially when you invest. And I love something. I want to go back to something you were talking about earlier is taking profits, right? And obviously, we've been talking a lot about cryptocurrency and crypto investing, but that concept applies in whatever way you're investing, right? So the key is you should be managing your portfolio, and taking profit also is kind of like rebalancing that portfolio, right? So you kind of talked about putting 5% here and there and there. Eventually, what ends up happening is maybe you've made some really great investment decisions, and that 5% turns to 9%. You have to be very disciplined enough to say, let's bring this 9% back down to 5%. So your goal is always to keep it at that 5%. And, sometimes you might have these rallies, which is great. It goes up to like 15%. It gets pumped, bring it back down, right? You need to have that discipline to make sure. And again, this is not just for crypto investing, but if you're investing in stocks, if you're investing in, I don't know how it would work for real estate, but it could apply where you're kind of always, using these percentages, managing your exposure to some of these assets. That's the proper word I was looking for. So thanks for sharing that. One last thing that I want us to talk about is we didn't talk too much about this, but Investor Abe is what you're known for. Some of the, the famous investors that I follow, I have this book here, The Intelligent Investor from Benjamin Graham. A big thing he talks about is, being able to evaluate assets, right?
essentially buying at the right price and getting out at the proper price. That's Ben Graham's theory. Then there's Warren Buffett's theory, which is rule number 1 is you never lose money, and rule number 2 is don't forget rule number 1. And then another part of his theory is also buy low and sell high, because Ben Graham is his big mentor.
So what's mine? So is that the question?
That's where this is leading, right? Yeah. What's your theory? What's Investor Abe's investment theory?
Yeah, no one does anything for free. They have to be incentivized. That could be a project. That could be just in life, right? And you need people, you need who's to help you with that process, right? So no one does anything for free. It has to be incentivized. If you understand this concept and you dive deeper and understand what the incentive economy is, you understand how you can actually build potentially wealth through this space, right? Because you can now evaluate an asset and say, is it built in the right way where a partnership can come in and it makes sense for them. For example, a great example of this, I know I'm speaking on Demo or even Helium itself. Some of these are great projects, but let's just speak for Helium, right? Why would a carrier want to partner with Helium? Because they're providing a service, right? And this service is going to also help their underlying customers. So if someone is building something and it doesn't actually align with their goals and their value, right? Because if you are a company, you probably want to acquire more customers.
Yeah.
You probably want to provide more value to your current customers. So it makes sense for you to partner with that project that does that. So when you start to evaluate assets, you start to look at these things like, okay, do they have partnership? And what does that partnership look like? If it's just them holding onto the tokens and staking it, and it's not a direct partnership that actually sees a potential for that, enterprise to utilize that technology and offer it to their customers. You see where I'm going here?
Yeah.
That to me is a great partnership. That to me is a project that will potentially succeed because there's, again, an incentive here to make sure you succeed. That's someone who is going to say, hey, you know what? You guys are in the bear market. We would like to invest some more, right? We how do we get involved some more? Because they are receiving value, so much value that they're willing to even, hey, we know other partners. We know other enterprise who will find this valuable. Would this be helpful for your skill?
Yeah.
Would this be helpful for, right? They're willing to provide their own resource for your project.
Yeah.
So when you look at that, when you start to see that, you start to nod your head and like, okay, I see where this is going.
I see. Interesting. So that would be a way to, I guess, evaluate an asset, a crypto asset, to say no one does anything for free.
They have to be incentivized.
Yeah.
And when I say and no one, I'm not just speaking of individual. I'm also speaking of enterprises, companies. Like, a partnership. Is it, as I mentioned, holding on to a token?
Yeah.
How much skin in the game do they have?
Yeah.
The asset pumps, if they want to sell, they can sell. I have no issue with a VC selling their tokens.
Yeah.
Why should you have an issue with that?
Yeah.
They invested in that project. But there's a difference between an enterprise that sees a way for them to, provide more value to their customers, and they can utilize that tool and, provide a different, form of promotion, or that leads to acquiring more customers. To me, that's a better partnership. So I look for those things when it comes down to these projects. So there's a way to think about it personally in life. There's a way to apply that in investing.
Yeah.
But it's not the sense of, again, feeling that you should expect it.
Yeah.
Don't expect, it still goes back to you, right? If you're applying this to your real life about incentive, is if I'm in charge of myself, I have my internal leadership, my own North Star. I know where I'm going.
Yeah.
Right. So when I have this opportunity to provide value in other people's life, I can do it freely.
Yeah.
And naturally, the universe will come back to me.
Yeah.
Right? In its own natural way, without me saying that, oh, you have to do something back in return.
Yeah.
Right? So it applies to projects as well.
Yeah. Yeah. So I think what I'm hearing you say is, as an investor, you need to have some level of skepticism, right? In whether it's Elon Musk releasing, XAI as a new AI company, which is supposed to be the smartest AI on earth, then you need to ask yourself, what is the incentive?
What's the
there?
incentive? Like, do you have skin in the game? This is what I mean by centralized and decentralized. This centralized ecosystem provides you with the ability to participate. ChatGPT is giving you a free platform. You utilize the platform, and they take that and become a billion-dollar company, a multi-billion-dollar company. What are you getting back in return? Zero. You're not getting anything back in return. Now, of
You're
course,
getting intelligence.
you get intelligence. Actually, you help build their model.
You're getting AGI.
You pretty much helped build their model, which they turn into billions of dollars. And yes, you get to utilize that platform for free, or you pay for it. But when it comes down to monetary, you're not valued enough. Maybe you can look at it that way. Does that hurt when I say, when you hear that? And maybe you're not valued enough. Or maybe they know your value, but you don't, and you're willing to give it for free.
Yeah.
Maybe that might hurt.
Yeah.
Maybe that might just be the reality. That's a centralized reality. The centralized reality is saying, hey, we want to build something that we perceive will be valuable to the market. And we want to have participants. And these participants will be running nodes. And if we see that this is valuable enough and we build the right ecosystem that has the right consensus and it scales over time, we believe that this will lead to the growth, the success, additional partnership, world domination, whatever you want to call it, right? That's the big difference here.
I see a pattern there, though. So that's like, because now I'm thinking about DeepSeek, for example, right? So DeepSeek is supposed to be open source, which means multiple people are contributing. And I think XAI is also open source as well. But multiple people are contributing to the module and making it better and better. And with that in mind, that means over time, it's just going to continue to get better. But then what's the incentive there, though? Right? And I think I get it. That's
it's open source.
Right.
If DeepSeek, I don't know, a year from now, 2 years from now, says, you know what? We're going to start paying revenue for folks who contribute to DeepSeek's growth.
Yeah.
And the way we're going to do this is you download DeepSeek, right? And we're going to issue out DeepSeek tokens. I'm not saying they're going to do this.
Yeah.
And if you hold on to the tokens, you can, if it's points, right, you can exchange it for real, in your own currency.
Yeah.
It's pretty much what crypto blockchain is doing. Is this something they may do? Maybe, maybe not. Maybe the greed might kick in and say, nope, it's still open source.
Yeah.
We're just not giving you the market share or giving you any revenue. The projects that does give revenue is the ones where it's just think about if DeepSeek did that. I can only imagine what would happen if DeepSeek says, hey, you know what, we're going to start giving away our revenue, a percentage of our revenue by you running a node or by you downloading DeepSeek. Yeah.
And I mean, I see so many reasons why that would probably be beneficial, because obviously like these companies are just so running these AI modules is super expensive. It
only takes one big player. And that's DeepSeek, sure.
Yeah.
And then all these other, companies are going to start saying, oh, we should consider this.
Yes, absolutely.
So the reason why it's not being done is not required. This is why I'm saying that you were a user utilizing these platforms. They didn't have to do anything different because you decided,
Yeah.
you signed that agreement and willing to give away your value for free
Yeah.
while they build $1 billion companies.
Yeah. Crazy.
Simple as that. And no one really questioned it until, Bitcoin came around and the current ecosystem, blah, blah, blah. And now we have this alternative.
Yeah.
So choosing that alternative is you choosing that alternative compared to that alternative. Not saying you shouldn't use centralized system.
Yeah.
I use ChatGPT.
Yeah.
But I understand that ChatGPT, my relationship is different for ChatGPT.
Yeah.
Right?
Yeah. I love that. So Investor Abe's investment theory is the incentive economy.
Yeah.
That's
no
lovely.
one does anything for free. You have to be incentivized.
I love that. That's great. We've covered a lot of ground on this episode today. Is there anything you wanted to talk about that I haven't asked you about yet?
No. I think this is great. Our ecosystem is dynamic. It might seem very chaotic to some few, but it is the great financial migration of the 21st century. Not being involved in this is, I would say, still one of the worst financial decisions anyone can make. And the best way to start is acquiring the knowledge. Just acquire the knowledge. Dabble in there and there. And go from there.
I love that.
Take full responsibility for your actions as well. Your decision making, your expectations, is all yours. If you don't pull your asset, you decide to invest your asset until it turns into $500,000, you don't take profit, take responsibility for that. If you take incremental profit and you take that and then invest in real estate or something else, some other cash flow business, whatever it may be, that is still your decision.
Yeah.
Right. So you just have to have a clear plan and a time horizon as well.
I love that. I mean, I always respect the fact that if I'm deciding to do something, obviously, yes, getting input from other people, super, super helpful. It gives you perspective. But at the end of the day, I want to be the one that made the decision, because if things go wrong, I don't want to have to point a finger at someone. I want to say, I made the mistake. I want to be able to take responsibility and be able to confidently move forward. So thank you for sharing that.
100%.
Yeah. So rapid fire, this one.
Okay.
This I actually didn't even prepare for this, but it just popped in my head. I kind of want to do it. But just give me one answer, one word, because it's you're gonna need one word for these. So, Bitcoin or gold?
Bitcoin, no questions.
Bitcoin or SPX?
Bitcoin.
Blockchain or Web3?
Blockchain.
ETF or single Bitcoin security?
Bitcoin.
That's it. It's a wrap.
I mean,
You want to talk about those?
no, it's straightforward to me.
Yeah.
It's, it goes back to what I was mentioning. What's the value? What's the incentive? What's the ethos?
Mm-hmm.
Go from there. Yeah, I mean, ETFs, but if you say it's Bitcoin ETFs or that ETF, I could care less. But if you tell me it's Bitcoin, maybe I might be interested. But to me, it is what it is. But yeah, anything that's involved the core aspects of our ethos and our space, I'm interested.
I love that. All right, man. It's been a wrap. Thanks so much. It's always great talking to you. Thanks, brother.